Gold and silver continued to trade sideways this week, conceding a bit of ground but staying well within their range for the past month. Friday afternoon's London gold fix was $1,766.75, a 1% weekly fall. Friday's silver fix, meanwhile, was $33.79, down 3% from last Friday. After 4 weeks stuck in a tight range, there is a sense that gold is due a breather soon. The volume of gold held by exchange-traded products is close to all-time highs, while the aggregate gold futures position held by traders on the COMEX exchange has grown increasingly bullish in recent weeks. That said, the latest data published at the end of Friday's US trading may already have shown that the tide has turned by the time you watch this. On the physical front, dealers in India continue to report subdued buying as a result of high domestic prices, with the festival of Diwali now less than a month away. In China, meanwhile, figures out this week show gold imports from Hong Kong fell by nearly a third in August. This may be due to wider economic slowdown in China, although gold prices were very flat for much of the summer. The lack of price direction, coupled with increased domestic mining output, probably contributed to the fall in imports. September's numbers will give us more of a clue as to whether or not August's fall was a blip. Looking at the long-term picture, the policy environment remains supportive for gold, with major central banks now committed to open-ended easing programs. Here in London, the city's top regulator, Lord Turner, this week called for more innovative and unconventional policies, saying the impact of quantitative easing is declining. BBC journalist Robert Peston reported that Turner believes the Bank of England should write off some of the UK government's debt that it has bought as part of QE. If true, this is rather concerning coming from the chairman of the Financial Services Authority, but it's even more alarming when you consider that Turner is a front-runner to become the next Bank of England governor. Comparisons with Weimar Germany's hyperinflation are probably premature, but the dynamic is the same. Creating money to fund government borrowing is generally not a good idea. Writing off government debt that was bought with newly created money would be a worrying development. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.